All right, I want to take a second today to talk about property taxes. Specifically, I want to talk about what we call as the tax proration. If you've purchased a home before or if you've sold a home before, you probably understand all of this, but if you haven't done either of those things, you probably should listen. So, understand, if you are buying a house, you are responsible for any tax bills that come out after you purchase that home. Understand also that some of those tax bills might cover timeframes that you did not live in the house. They'll cover timeframes that the seller lived in the house. Well, that doesn't seem fair, and in some ways it's not. So what we do is we make it fair. We make it fair by having the seller give the buyer what we call a tax proration. What we do is we calculate, based off of previous year's tax bills, how much the taxes would be for the time frame that the seller lived in that house. And then we have the seller give the buyer a credit at closing for that estimated amount. So please understand, if you are a buyer, that you will be receiving that credit, and that credit will reduce the amount of money that you need at closing. Understand, if you are the seller, that you will be giving that credit to your buyer, which will reduce the amount of money that you receive at closing. Hopefully that helps. Hopefully that's clearer than mud. If you have any questions, always give us a call. Bye-bye.